Okay, so now with the CC, the CC just stands for confirmation candle. CC stands for what? Confirmation candle. So what it means is that in looking at the CC, you are just trying to use a candle to confirm. I get it. And then you would also realize that if you want to use just a candle to confirm your entry, you cannot certainly use the lower time frame to be confirming your entry. You certainly would need a higher time frame. And the higher time frames here and the way they move are, let's say if you use the weekly, then it goes with the daily. And if you use the daily, then it goes with the what do you call it? H4. And if you use H4, it goes with H2. And if you use H2, then it goes with H1. Mostly that is where we like to end. In fact, we don't want to go beyond this. This is how it goes, or monthly to weekly. So what we are trying to say here is that we are using one candle to confirm your entry. So what do you see in the candle? The body matters, the wick also matters. The gap matters, the A and V also matter. And you must also understand that the level, the time frame that the level is drawn on, you do the confirmation on half the time frame of that time frame, the first time, the higher time frame. So if you use daily, is daily not 12 hours? So the best would have been 6 hours time frame to be able to use. Hey, daily, sorry, 24 hours. So you should have been using the 12-hour time frame to give you. Yes, that is how it should be done. But then we don't usually use the 12 hours. So that is why we use the daily with the H4. But you can notice from the H4, we use H2. That's half of it. H2, we use H1, half of it. And if it is a weekly, we use daily. But the daily and H4, it is not half, but it's been working out if we are using this method. But you notice when we're doing the direction, we're looking at daily and then H1. Daily and then H1. So please take note. And in looking at the confirmation candle, it has two ways. It has two ways of looking at it. Two ways. And what are the two ways? I said 2 ways of looking at it. The 2 ways are one, CC itself. CC alone. That is the first one. Oh, sorry. CC alone. And then 2, oh, what am I doing? And then 2 is the EQ. But what does the EQ mean? EQ stands for equilibrium. These are the two things we look out for. So, guys, let's take note of this. The CC and the equilibrium. People have not really taken notice of them. The CC is different from the equilibrium. So you can just trade using the CC alone, or you can trade using the equilibrium alone. So now the question is, what is just the CC alone? I get me. What is just the CC alone? The CC in this case is where you have a level on a higher time frame. I get me. And then on the same time frame, there's a rejection on it. if you are looking at just a pure SNR, we say that time frame has been mitigated. But that is where we will say CC. Let's look at this. We are on H1 time frame. If you take this, we have H1 V level. And on this H1 V level, there's a CC because there's a rejection. And the condition for the CC is that if you have a level and price is coming to the level, it has to reject the level, but then still close in the direction of its coming. So let's assume this is a buy, a V. Price is selling down. So the CC candle must also come down and close as a sell candle. It has to close as a sell candle. But then that sell candle must have a wick that will touch the CC. So it has to close as a sell candle like this. A sell candle like this. But then it must have a wick that would have touched it. That's the condition for the CC. A wick. Oh, let me use the straight proper line like this. This one must not be bullish. It must not be bullish. I hope you are getting. Meaning, if this is going to be bullish, then it will mean that it has rejected it and then closed above the entry, the opening. The opening was here. I get him. Then it has closed above me. That's a very long wick. But it must close with a wick touching the level, whether it's gap or it is a V or E, but then it must still close this. Then the next candle that will open will now go in the other direction. That's the main direction you want. That is how you consider it as CC. So we'll be looking at some of them here. So the CC is just a simple thing. You have your candle, then you have your other candle. You have your other candle, which is now, let's say, bullish. And then, don't worry, if I want to put a wicks, it will be delay me. Okay, for this one, I'll put it there. Then you have your wick there. And then they have the wick here as well. Certainly, this is giving you a V level. This is giving you a V level. For the SNR, a V level, meaning price has come down and gone up. What does it mean? The close of this candle and the open of this candle. But now look at something here. When you are drawing the V level or the levels, especially the A and the V, use the close of the candles and not the opening of the candles. So if it was the other way around, if this was a buy and this was a sell, it means it would have been A level. And if it was A level, use here the end of it, the buy. Don't use your line, your level to be the opening. It should be the close of the previous candle. So if we were to use a level here, this is what we would want to come and do like this. We'll use it to start from here. Don't bring it here. If you bring it here, you are missing it. If there's a gap, that is when you realize, see, if there was a gap, then you will be wrong. But because this is on the same level, that is why you are seeing it this way. Now, let me check with one that is not on the same, where one closed, one didn't open. Then you would see a difference. I think this is a saxo, so it's like almost all of them are on the same level. Let me use this one. Let's look at this. I'm placing it here. This is the close of the candle. So it should be here and not the open of this one. Now let me go to the line chart and you see. You can see that you've missed it. No. So please take note. Always make sure that when you are placing it, it should be on the close of the candle. Please take note of that. Now, once it has closed, you've placed it there. When we are talking of CC, we are now saying that this candle, okay, this was coming downward, so that's a different thing. This candle opened and came in and then went. So if I was here, I would have bought straight away. I will show you a scenario of this. A valid CC is when you have this and it has gone. Several candles have gone and it is coming back. In this scenario, your valid CC is this type. So please take note. It must be the bearish one with a rejection. Then the next candle will come and open bullish. Will open and then you can get your entry when the next candle opens. So please, we are just looking at the CC, which is on the same time frame, meaning that we are looking at CC on the same time frame. So this is how it should look up. So this is what we are looking at. So we have a V level. The candle has come in. That is after several candles. Then it has now come back. Then it should close the same way like this has done. So this is a valid CC. As for the next, then it now rejected up to this level. Then the next one open and still close lower. But this is a valid CC. Meaning that your entry would have been when price came back to the level. So even with this, it closed bearish. Even this also closed bearish. But if you are taking your trade here, well, it means that this closed bearish, then it opened here. I get me. And then went up, still came down. So if you had bought here, you still would have closed in profit because it closed here. I hope you are seeing. Because it's a sell candle, but it gave a long wick. So this is where the entry would have been. So it is the CC level that you have drawn from the sources where you take your entries on. So please, we are looking at the CC. So it means that CC one way is purely on the same time frame. Is this where I was doing it? Purely, So I told you one way. We are looking at the CC purely on the same time frame. Just like this. This one that we're doing. On the same time frame. You have this level, vein level, that's giving you the CC, it has gone. And then you have another vein level, then the CC is the immediate candle before breakout. And after the breakout, most of the time, if you want to come back to it, then let's look out for more CCs. If you get a CC level, and then it comes to touch it, it will come back. It tries to come back. So let's say this one didn't give a CC. So the CC can be gap as well. It can be gap level or, let's say, so it can give you CC gap or CC A or V. Look at this. If your chart is very correct, it's supposed to align. This one gave a slight breakout. But if it aligns well, it will give it to you. Look at this. So you can see Saxo on H1 is not really aligning. If you take it to the higher time frame, it aligns more. CC breakout, then it comes back. Look at this. You see, CC. This was a miss. This is a CC. It rejected. Then there will be a buy. This is on H4. This is on H4. So please take note. We are looking at the first way of the CC, just purely CC alone. We are just looking at the CC. So what it means is that you have your vein level, like this. Oh, why the thing is not picking up? You have your vein level. Price has given you, it's coming to it after giving you the vein level. Then the first candle that will come will reject it, close here. Then the next candle will now come back to the level. That's where the execution will take place, and then it goes. So it means you are doing everything still on the same time frame. But you are not shifting. So it's the same time frame. You wait for you create a level, you wait for the CC to take place, and then you take the entry. That is on the same time frame. Now, when you are able to get that, it works best on the higher time frame and not the lower time frame. Look at this one. This is H4. If we were to, let me take this one out. If we were to draw this, if this is a level, look at it. Oh, this is a level. And notice what I was talking about. I didn't use this. This is a buy candle, the close, and then this is a sell. So you see that there's a gap there. If I had used this one, it doesn't mean we'll miss it, but see, it won't be that accurate for me. See, you see it has gone far. So that is why it's better you use this one this way. Now that this has rejected, this is a level. This rejected. No, this, sorry, this didn't get there. It didn't reach it. This is a level. This is a miss. This came and rejected. And then the next one will touch it. It will come down. So you can see what one would have made on this one. How many pips when it came back to the same level, please. We are using the same level, not another level. We are using the same level, not another level. So you can see it. That's about 140. About 140 pips it went. Most of the time, the entry level just goes directly down straight away. It doesn't give a long wick like this. Once the CC has taken place, it doesn't give a long wick. It just goes down straight away. So today, we'll only be looking at the first part of the CC. We'll only be looking at for the first part of the CC. The second part will continue with that one tomorrow. Thank you. So let's keep on looking. You can get them. Now, if you get a gap level 2, it works, not just this alone. It's not only a, what do you call it? Vein levels. Gap levels also give you. So mostly we like to get them on the higher time frame. Imagine you get gap, it will just come back to it. Once it rejects it, it will try to take it. Once it rejects it, to try to. This is a gap level. It rejected. Then there's a buy. This is a gap level. Then it came back. Then it went. So imagine you entered here. So this is telling you it closed here. This price opened here, came down, went up, and then closed bullish. So imagine when you entered here and it went up here, how many pips will you have got? This is a daily time frame. This is daily. So you can see what it has done. This one might not have reached it. Look at this one too as well. You see, A level, CC, and then it sold. Gap level, CC, it bought. On the higher time frame, if you use the closer to the zones, you can get a lot of it there. Now let's proceed. trying to get, this is also an A level. Even with this, I'm not looking at direction because we're on daily time frame. This is an A level. CC, what did it do? It sold. This one, the issue is that it would have given you a long way here. So that is why when it now comes in there, you can now do refinement. You can go to when you are using the equilibrium, which is what I like, the equilibrium. Once you are now using the equilibrium, you can now refine it to probably you would have gotten your entry somewhere around here. And then you will go to go. Let's also see, are there any more? Here, it has not yet come there. This is a daily, this thing we are looking at. So let's see. Here, there's a CC, but it does not come there yet because why? It's a higher time frame. So you could have even got to your entry if we were using the second method, the equilibrium. After this one alone, if we had gone down when we are going to the second method, you would have gotten your entry here. You don't have to wait for it. So if you want to use the same time frame entry, it's when you have come to the chart. And then let's say you've come to the chart. It has given you are now drawing it and you've noticed an A level. CC has taken place and price is coming on the same time frame, then you can take it. But if you have come to the chart and it has only given you the level, no CC yet, that is when you use the equilibrium, which we'll be looking at tomorrow. But the first way, as I mentioned, is just to use the same method. Oh, sorry, the same time frame to look for your CC and then entry. CC, and then you wait for it. But that one, you'll be missing a lot of the trades. So imagine this a level. So imagine if this is a level. If this is a level, CC has taken place. Now you have to wait all the way for it to come there before you take your entry. No. It is only when this has taken place, CC has taken place, and price is coming to it, then fine. But if you have to wait, then you use the second way. That's the second method, this one, the equilibrium, which we'll be looking at tomorrow. So I'm reserving that one for a full session because we need to grasp that one very well. It needs a full session. And then we'll have the chart for it. There's a chart that you look at because that one has about 5, 6 different setups. 5 or 6 different setups on it. It has a total of 13 different setups, but we'll be looking at about 6 of them. Even the 6 we don't use all, we use about 5 of them. And then that is it.